see Chipotle earnings?
Yeah, painful. It was pretty ugly. They were down, what, 15% after hours, and they, worse off, I think the thing that triggered it was like young people can't afford to eat at Chipotle anymore, which makes you wonder why they even exist. Like, what are they doing here?
I mean, no, let's look at the state of the economy through their earnings, right? Like, I think
Yeah.
that's the real reveal, because stocks just keep going up because, earnings tend to impress with these big companies.
Yes.
But
And
the
AI
real
can't
issue,
really jump in and make Chipotle easier, right? Easier to operate.
yeah, I mean, maybe we can get a robot that makes the guacamole or something, but at the end of the day, it's a manual, it's a food business.
Yeah.
But no, that's the crux of it. So hold on, this hit the headlines. I don't know if everybody saw this, but so Chipotle, the headline is Chipotle stock craters as company says young people without jobs can't afford their food anymore. Okay, this is a big deal. So in August, the unemployment rate for Americans aged 20 to 24 stood at 9.2%, up from 7.9% a year ago. That's not good.
Yeah.
So for all
How
of
do
you
they
out
even
there
know
with,
that? Do they say, hey, because I haven't been in Chipotle, honestly, in a while, but do they say, hey, are you working or not before you order a burrito? How do they know this stuff? How's it even possible?
I don't know the answer to that, but I would imagine that it's all through like credit card data, spending
Yeah.
data. Like, I think the credit card companies know more about you than they don't know as much about you as Meta does, but they know a lot about you, your spending and whatnot. And so I bet that they're well, here's what you're getting at. Just to there's a cliffhanger here for our listeners. So this is saying households that make 100,000 or less make up 40% of Chipotle's total sales. So that's the point you're making, is like, how do they know that?
Yeah, that makes sense from credit card data.
I think it's credit card
But
data. It has to be.
gosh, I could see, because we always talk. Chris and I always talk about like the how expensive a burrito bowl is, or a burrito is, and it's a big reason why I don't go there, because I think there's better quality options that are a little bit cheaper.
Nah,
Right.
Chipotle's great. That's a bunch of BS.
You sound like a shareholder, not me.
You're a shareholder.
Yeah.
You're a shareholder, and you won't even go there. That's terrible. That's unbelievable.
I know. I don't know why I'm laughing about pretty bad earnings, because I think it's worsening. I don't have my stock sheet up because my computer keeps resetting on us. So
That's okay, but that's my point. Is like, this is what's not seen. I feel like this is you've got and for everybody out there with kids that just graduated college, like, I'd love an email if you're like, yeah, my kid found a job, it was easy, or yeah, they moved back in.
oh yeah, that would be great feedback to get.
That'd be amazing feedback to get,
Yeah.
right? I mean, I think this is the kind of the scary thing, is that does AI eat these jobs? And maybe we're
Not
starting to
Chipotle
see
jobs.
that. No, sorry, the jobs of the customers of Chipotle.
Oh, got
Right.
it. Got it. I see. Makes sense.
Yeah. So anyway, CEO goes on to say that he expects the first quarter of next year to be the toughest for middle and low income customers, meaning the company is expecting to endure several more months of pressure on sales attributed to young people.
Yeah.
Wow.
Yeah, we do get quite a few clients who have high school students ask what we think about what they should study. I think the biggest thing, just broadly, they should study things that kind of teach them to think, right? I bring up the example of my friend who works in plenty of large tech companies and is in high demand, but he's a philosophy major. Philosophy in and itself is just thinking, right? They're teaching you how to think. What company had the chief ethicist? I think it was OpenAI. They have a chief ethicist that helps determine how to guide the AI to be more socially acceptable, ethical. I don't
Yeah.
know what the ethicist does, but I don't think that is easily replaceable, right? Because I think the things with AI we've seen is it it can't tell what's important information and what's not important information, if that makes sense. Because we use AI in lots of different varieties, and there's some big holes in it. And I think the biggest hole that I see is it doesn't say this is good, this is bad, because it doesn't know, right? Or this is important, this is not important, because it also doesn't know. So I think, I don't know, I don't envy their position at all. I'm actually pretty grateful that I'm, developed my career when the internet was booming. But even then, they said jobs were going to go away because of the internet. Or take a step back, ATMs, right? Bankers are just not going to exist anymore because the ATM is going to replace everyone, right? And you go to a bank on a payday, look at the line. It's out the door to see a teller, not the ATM.
AI efficiency is starting to be seen in small companies. I'll touch on this here too, but I want to ask you a fundamental question first. Are you bullish on Yum Brands? Chipotle is, so for everybody that doesn't know, Yum Brands is kind of the
Taco
conglomerate
Bell,
that
KFC,
owns a bunch. Talk about KFC, Pizza Hut. And so they are posting earnings on November 4th, right? So is Chipotle kind of a leading indicator to people trading down, right? Because that's what we saw. People in high inflation, you're not buying beef, you're buying chicken, right? Do you think that Yum Brands is going to knock it out of the park on earnings because people are trading down to lower cost eating out?
I'm going to say no, because these places have raised their prices, right? You throw a McDonald's in there and it's like $11 for a meal. You go to Chili's, it's $11 for a meal, right? What would you rather go to? I think their upper limit.
Oh, that wasn't
you go to Chipotle. Yeah. But you see what I'm saying is if you're spending that much, might as well trade up. I don't think Yum Brands, Pizza Hut's really stands a chance against like the quality mom and pop local pizza areas that every city seems to have. And again, if Pizza Hut wants to charge $20 a pizza, you're going to go to a better pizza place. I don't think they can really compete on price anymore. And if they try to raise their prices, they lose on volume. I'm pretty bearish on Yum Brands.
They missed last quarter by 2 cents. They beat the quarter before by 2 cents. And then they actually beat the quarter before that by a penny. So you think about probably some adjustment and sort of jostling with their portfolio of brands and maybe some pricing stuff. Because, if we go all the way back to a year ago, we were still in some kind of scary inflation times, or at least the data was looking a little scary. However, I guess young people probably had more jobs then. I don't know.
No, the employment, right? Young people were able to hop jobs just 3 years ago. I keep saying 2 years ago, referring to 2022, but the job market was so strong.
Yeah, in fact, my read is that it's actually a little bit better today than it was a year ago.
It's more healthy.
Well, at least for more established people. Okay, here's the point I want to make with AI efficiency starting to be seen in small companies. C.H. Robinson just came out. C.H. Robinson is a freight broker. So they are a transportation company. They broker, semi trucks and the move of logistics and that kind of stuff. Okay. So they're an $18 billion company. So they're small. They fit in kind of the small mid cap range. This isn't a Microsoft size, $4 trillion company. Shares of C.H. Robinson surged more than 20% to a record high on Thursday. This is yesterday, as investors cheered the global freight forwarders quarterly profit beat due to AI-driven efficiencies at a time when the rest of the logistics sector has struggled. C.H. Robinson is the U.S.'s largest freight broker, and it has been using AI to automate tasks such as generating shipping quotes, scheduling pickups and deliveries, and tracking shipments. This helps speed up its operations and reduce reliance on manual work. An analyst came in here to talk about their comments. They said, "We believe that C.H. Robinson's scale and first mover advantage will allow for continued productivity and share gains in the coming years, and management has shown its operating model is differentiated. Company's adjusted profits 1.4 blah, 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 blah." Crazy. Oh, one more thing. The beat was helped by get ready, 12.6% decline in operating expenses. Employees' headcount was down 10.8% from a year ago. That's crazy. 10% less people, 12% decline in operating expenses. They knocked it out of the park.
Yeah, and I think implementing an AI in a much smaller scale seems more practical, right? But again, as you mentioned, 10% fewer jobs? Yeah, I don't know where you stand on it. I'm kind of mixed, right? Because does AI create more jobs or does it eliminate jobs? I don't know if it's 100% either one. It might be a combination of the two, right? It's just going to eliminate some old jobs and then maybe create new jobs. But then there's this transition period where people are just simply aren't prepared to transition, right? They're just going to be jobless. And yeah, if you're in the logistics, I don't know, they do trucking or what do they do? Shipping?
Trucking.
What kind of trucking? So that's 10% less trucking work, which maybe, again, an economist would be somewhat, less emotional about it and say, well, that's 10% more available bodies to work somewhere else, right? And it's tough, right? Because if our jobs got eliminated, I don't know what I would do. I would probably, you know what I mean? I'd probably look for something finance related, but then, you know what I mean? Because that's kind of been me, my identity, my purpose. And to shift off of that seems difficult, but it might be inevitable. Like, that's the scary thing.
Some people will need worker retraining. Some people need a different position in their same line of work that they've been in for a long time. I mean, this is no different than what's happened for years. The internet was going to replace everybody's jobs. Then .com, you don't need anybody anymore, right?
Yeah.
Warehouses, you don't need storefronts, so nobody's there.
Yeah.
You've got warehouses that are operating.
Steel plants in the Midwest, right? Whole towns were wiped out.
Steel plants in the Midwest, exactly.
Right. Coal mines.
You've got robots building BMW's cars now, right? I mean, this is just in infancy, and they're working. I saw this post. They're working 10 or 12-hour days. I don't know why they're not working 24 hours. Maybe robots have a union or something like that. But but the
I think
point
it's
is,
an energy thing because again, maybe that's the biggest bottleneck for all this is energy.
That's actually a really interesting point. Maybe they operate during like the nighttime when
it would make sense.
The peak
right?
rates are off. That actually does make sense. I mean, but it's supply and demand. I mean, if you can operate 24 hours, maybe you don't have that many cars to sell. But the point I was going to make there is that these robots are operating in a lot of cases in factories that have their lights off. So you're talking about you don't need lights because they can see in the dark. So I mean, it's just wild to think about.
A quick tangent. Chris, did your dad or mom or parents say, turn off the lights, you're wasting electricity?
Yeah. Well, and turn down the hot water in the shower. And we were never a don't flush the toilet household, but, we were a take quicker showers and all that stuff.
Okay, I got to point to this. Okay, turning off the lights. I was at Home Depot, got new bulbs, and the thing said, estimated cost per year.
Oh, yeah.
$3. I'm like, what? For an entire year, I can leave this light on and spend $3? My dad was completely blowing smoke, right?
No.
Or am I reading that
Read
wrong?
the fine print. I'm fairly certain the little star next to estimated cost says based on average usage. So it's not assuming that you're leaving it on from 8 p.m. to 8 a.m.
Okay. Because I still yell at my kids for leaving their lights on.
Well, I mean, it's good practice, right? You should probably just turn it off.
Okay. Sorry.
In your area, does your power change rate like at night?
Yeah.
It gets cheaper.
So yeah, we start the dishwasher at 8 o'clock because there's a lower tier at 8 o'clock and there's even a lower tier at midnight. So and then it picks up again at I think 6 a.m. This is the Sacramento area for everyone listening. I'm sure you guys are the same. Where
you charge the car overnight, like you do all that kind of stuff.
Yeah, it's like on a timer, and it just it's at the lowest rate possible.
So I was just looking at this, and I was looking at my bill, and I thought, so I'm up in the Seattle area, so Puget Sound Energy is our provider for gas and power, and I thought we had something similar, but I was looking at my bill recently. I mean, after doing some Google search that didn't really yield a lot, I was looking at my bill, and it looks like it's a flat rate for the first set amount of kilowatt hours. and then it
Yeah.
actually goes up for the next
Yeah,
set.
exponentially grows up. Yeah.
Yeah, and I saw
So
that
if you're
on
a
my,
super user, yeah, it becomes an issue.
and that makes sense. But then
Yeah.
I didn't see like, oh, here's how much power you consume after 8 p.m. or whatever. Like it didn't break that down, and I don't believe that we have a rate here that ratchets down, which is kind of lame. Meanwhile, I get emails in the summer like, we're having a contest and everybody should turn off their air conditioning from this time to this time, and like,
Yeah.
but they don't actually incent it. So anyway,
So yeah, certain years we get rolling what's called brownouts after Jerry Brown, but
Enron.
it's
Yeah, you get the
yeah,
Enron effect down there.
it's still kind of happening. It's been better, but our grid is tapped, right? I think was it me and you talking about why aren't there data centers being built in Washington? Like
Yeah.
given all like exclude all the noise and all the
Given our cheap power, really.
yeah, and you said there's no room on the grid. Like
There's no room on the grid.
yeah,
Part of that is
So-
we're actually selling. There's the Columbia River, which runs through Washington and then borders Oregon and goes out to the ocean, has a lot of dams on it. I don't know, 11 dams or something. So we get a lot of power from that, and it's cheap power up here. And one of the dams that's in kind of like central Washington, 100% of the power that it produces, they sell to California. And so, that's an
Yeah.
interesting kind of conundrum. States, sell this stuff back and forth. And, I wonder at what point do they say, yeah, we're going to end, and that's probably a multi-year contract, but at what point do we end this contract and bring it back in-house because, the rates are going up and the data center can pay more. I don't know. I love the tangent. Should we start the show?
yeah, let's do it.
This is episode 77.
If they're still with us.
This is
Halloween day.
Yep, go ahead. Take it away.
Happy Halloween. 10 in the morning, Friday. Market. You might have to help me out there, Chris. I've been having computer issues, so I'm trying to close everything that uses any kind of computing brain power because this thing just keeps restarting on me.
Yeah.
And I think this is our fourth take.
This is our fourth
Right.
take to try to get this thing going.
I
so
hope.
hopefully
I
we
really
can
hope we sound natural, Chris, because it would be awkward if if we didn't.
Hopefully we can get all the way through
All right.
it.
Yeah. S&P is flat at 6,800. The Nasdaq is also flat-ish at 2,300, and this is on the backs of a pretty big earnings week. I'm gonna try to rattle off memory. Meta, Microsoft, Amazon, Netflix, Nvidia's in a few days, but who else? Chipotle,
Chipotle.
All the-
C.H.
all the big
Robinson.
names. C.H. Robinson. All the big names reported this week, and it was pretty mixed. Right?
It was pretty mixed.
Let's start with Amazon. AWS knocked it out of the park. Amazon's up 13% after hours, 10% today. Great earnings, right? I think they really could have used up some positive response to their earnings, which I honestly thought have been pretty good all year, but this was the first time the market responded well. Oh, Google also had very good earnings. And then not so good, Meta and Amazon, ironically being questioned for the amount of...
No, Amazon was good. Microsoft.
Did I say... sorry. Meta and Microsoft, sorry.
Yeah.
Google and Amazon were good. Meta, Microsoft, not so good. Ironically, not because of the revenue and profit beats. Both beat. It was the question of how much they're really spending on AI and is it too much?
Yeah.
Which... both Amazon and Google said they're increasing their AI spend, so there must be some kind of upper limit that the market is assuming, and you go beyond that, you're in trouble. Makes no sense, but you know what I mean? Like just the last quarter, Meta was like being praised for the amount of AI spend and how they're going to win this race, and all of a sudden they're down 10% on earnings.
This is what we've been talking about for over a year. Show me the money. Like that's what Wall Street's starting to
your
say.
business, right? Make some money.
Literally, show me
Yeah.
the money, and that's what we're not seeing now. Google, I believe Google beat on all their business lines, which was impressive. They beat on cloud, they beat on YouTube, they beat on everywhere, which I think is why they've jumped. They've actually put together an incredible year. That'll be one of the predictions that I got horribly wrong. at the end of the year last year. So I'm excited to have that podcast here in a couple months and go through all that. But Amazon jumped because they beat cloud. I mean, retail
you
was
want to
good
talk
too.
about wrong?
Say it again.
You want to talk about wrong? I called for what, 8 new all-time highs this year. You want to guess how many we got this year?
Oh, you just said it the other day in the meeting. It was like 32 or something like that.
39 new all-time highs this year.
Well, I mean, as I like to say, the market spends 50% of its time within 5% of the all-time high. So you hear it all the time.
And that chart doesn't go up without creating new all-time highs. I don't know if people are... Yeah. So, there we go. All right.
There's a lot to talk about today, so we can talk about this AWS outage, but I think this K-shape economy is like the craziest thing. So where do you want to start? I'll let you start.
Yeah, since we're talking about Amazon, I just wanted to point out a few weeks ago we had the AWS outage, which again, companies are going to have outages once in a while. But it was actually surprising how many applications went down because of the outage, right? I'm not picking on Amazon, but I'm just pointing out that AWS is everywhere. Obviously, with Amazon and Prime Video, makes sense, right? It'd be weird if they started using Google Cloud or Azure. But,
Amazon Prime Video hosted on Google Cloud.
But it was I'm just going to name some of the big ones, like Reddit, Disney Plus, Coinbase, Perplexity AI, the McDonald's app, Ring, doorbell services, Venmo, all down. Also, you include Microsoft 365, Zoom, Slack, and Atlassian, which it's a lot of big applications that lots of people use. And that outage was maybe not even a full day, but it made lots of news. But when I pulled the list, I was just shocked at how many people use AWS.
Everybody. And I know that Azure went down like right before earnings, so it was like kind of the irony of we beat cloud, but it had a blip.
Yeah, which again we totally get that happens, but wow.
Yeah. Well, this is a normal part, in the articles. Here's what frustrates me about this: every time this happens, because it happens, then you get the articles like, oh, we're so dependent on these one. Everything runs through here, and that's the risk. It's like, well, duh. Like everything does run through these two main providers, and so that I just think that's like the media being the media, which is perpetually frustrating.
You want to know what Amazon stock did that day? It was up. So
I mean, they'll reset it. It's fine.
Yeah,
happens. All
right. The next topic, maybe it's part of the K-shaped recovery too. Beef has been in the headlines where U.S. produced beef has essentially gone up, right? And it keeps going up. It was up 13% year over year compared to 2024 in August. So what are we going to do, right? We lower beef prices by injecting more supply. And people are unhappy because we're potentially going to import beef from Argentina. And beef farmers aren't happy. American consumers aren't happy because Argentinian beef doesn't have, from what I've researched, doesn't have the same food standards that we have. I mean, not to say we're perfect, but when you're bringing in beef from another country, you're definitely going to get a different type of quality. But again, beef has been persistently expensive, and we have not gotten a break. So beef farmers probably are enjoying a little bit higher margins because they have limited supply as well. Mm-hmm. But again, I'm not trying to imply that they're purposely restricting supply, but that low supply relative to demand is helping their bottom line. And they're unhappy that they're going to see more supply come on, or being proposed to come on board with the Argentinian beef. Again, I think this is just like a last week headline, and it's just probably already passed by the way things go with headlines nowadays.
It is way more expensive. I mean, I think what I'm fixated on here is just the price increase. You got a 5-year chart here. Live cattle futures up 140% over 5 years.
Yeah.
That's a lot. That's 20% a year. That's not inflation at all. Crazy.
Yeah,
So I
that's
think that's
something
the
else,
most
right?
alarming thing. That's
Yeah. So
wild.
the futures market, farmers do transact in there, but there's also speculators. So I don't know who's responsible for what, but generally farmers will say, "Hey, I got cattle growing in 6 months that are ready to be slaughtered. I'm going to sell at today's prices 6 months down the line. Therefore, the future, right? That's I'm setting my price now, so I know exactly how much I'm making."
Yeah.
On the other side is anyone who says, well, that farmer's selling too low. I'm going to buy that futures contract from him and then make money by buying that beef and selling it at a higher price. That's basically broken down how the cattle market, well, how really any of the commodity markets work. We do it with corn, wheat, maybe soybeans. I can't remember. But that's another crop that's been under the headlines too, because soybean farmers in the U.S. suddenly don't have the largest customer in China, and they're pretty upset that the trade war has impacted them.
So you expanded this with Procter and Gamble comments here, and just talking about the K-shaped economy. So what's your take here, and let's talk about this for a minute.
Yeah, this one's Coke and Procter and Gamble. They have a line of products that range from relatively premium to relatively budget.
Yep.
They're seeing that more and more people are buying the premium stuff in bigger quantities. And on the flip side, they're seeing more and more people trading down on the bottom end and buying less of it. So there's that K-shape, meaning the people who can afford the premium product are able to buy more, right? Just look at Costco, right? You're getting one type of shopper there, and then you look at Walmart, you're getting another type of shopper, and their behaviors are working in opposite directions. Where, again, I'm just using the labels to make a point. The Costco shopper seems to be less price sensitive, and the Walmart shopper is shopping on a pretty tight budget. And then we're using Procter and Gamble and Coke because they're seeing the same thing within their own product line, right? So people are just buying more and more of the good stuff, and then the poor people, I don't know why I said that, the lower income people simply can't buy as much, which is that's what we mean is that there's two economies going on where the haves and the have-nots, and it's starting to spread, right? Chris and I brought up a stat where 10% of the top earners are responsible for 50% of the spending in the U.S., 50, which is a really large relative imbalance.
So I'm looking at, so this is related. Delta is talking about this. So
yeah.
Delta is seeing a major shift. I'm just reading this here quote. So Delta is seeing a major shift in its revenue composition, with premium seats closing in on 50% of their revenue. Isn't that wild? 5.8 billion comes from premium seats. 6 billion comes from the main cabin. Unbelievable. So that's first class, comfort plus. That's up
Business
9%
class,
year over year. Main cabin is up 4% year over year.
Yeah. Travel's a big thing, right? You talk about lounges, but how crowded are airport lounges?
Crowded.
It feels like everyone's in there.
Crowded.
But then how crowded is the regular airport? Crowded. So there's that divergence of, there's more and more people in the lounges, but there's also more and more people in the cheap seats, so to speak.
It says Delta says for at least the first quarters of 2026, Delta expects premium seats sales to overtake coach and main cabin sales entirely, potentially making Delta the first major U.S. airline to be majority driven by premium sales. Unreal.
Yeah.
Unreal. 9%.
So we're seeing that.
No, I'm sorry.
Everywhere.
9% change up. 9% increase in revenue on premium cabins. 4% decrease in main cabin revenue. I said that wrong.
Yeah.
Main cabin revenue down 4% year over year. Premium, first class comfort plus is up 9% year over year.
Yeah. So even worse than what you initially read.
That's crazy.
In the automobile
K-shaped
industry.
economy.
Yeah, we're seeing an increase in auto loan defaults and repos with FICO scores below 620. But we're also seeing the average price of new vehicles surpass $50,000. So people are buying bigger, more expensive luxury vehicles while people are losing or getting their cars repossessed. So that more K-shape, right? So people are able to spend more while people are losing their cars.
This idea of the K-shaped economy, just for everybody that doesn't understand, is the recovery, really even stemming out of COVID, was you had the upside, which were generally higher income people that could work from home, work remotely, continue to buy cars, buy food, this kind of stuff, buy stuff online. They didn't need to go into an office or a workplace that required them to be in person to work. So generally higher income people, those people have just continued to, quite frankly, thrive and add net worth gains over the last 5 years or so. These are also the people that own stocks. So, like 90% of the stock market is owned by the top couple of percent of the
wealth
US.
effect, right? Like stocks are up, I'm going to go buy more.
The other side, the other side of the K, of course, goes down, right? And so it's getting harder and harder for people that are lower income in order to just make things work. Coffee's going up, fast food is going up, Chipotle can't be bought anymore, right? And so it's just interesting to see that data. And then we've talked about this on the pod as well. You just said it. 50% of consumer spending is coming from individuals that make, or households that make over $250,000 a year, which is the top percentages of the U.S. That used to be 70% of spending came from kind of everybody in the U.S.
Yeah.
So we're increasingly becoming this economy that's powered from, quote, rich people. And those services, the flights, the cars, and all that stuff is what's moving the needle on sales.
Yeah, well, the services are starting to migrate towards that upper tier, right?
Exactly.
Yeah, like the was it Delta that you used as an example?
Yeah.
I think we'll see a lot more of that with airlines as well. So I hope. Again, I think things are going to get worse for the bottom half with the government shutdown too. But again, I don't know. This level of concentration is sustainable, but it might be, though. That's the thing, is like any kind of recession, generally the upper half tends to be able to rely on savings and investments to get them by.
Yeah.
And we typically don't see a reduction in quality of life there.
Right. Yeah. Yeah. I mean, how does this end? I don't know.
Yeah. I don't know.
Rich people keep spending more money, which keeps powering the economy, which possibly means we have shallower recessions, dare I say, because spending doesn't crash as hard. I don't know.
Because that props up the stocks that they own.
Props up the stocks that they own.
And it kind of keeps going, right?
Kind of keeps going. The mom and pop neighborhood stores are doing fine, as well as the big brands, the Chipotles and the Deltas and these, right? Starbucks. By the way, fun fact, Starbucks posted their first quarterly gain. They grew same-store sales by 1%, which is a big deal for them because the CEO, who was at Chipotle for a number of years and had a phenomenal run there, left to join Starbucks 1 year ago. And you all remember that in the news. He was all over the news for, he's going to work remotely, and he's granting this exception, and he's getting paid a silly amount of money to come over to Starbucks. And he's executed now this turnaround plan. And now you see Chipotle stock going down and Starbucks stock going up. So maybe what he's doing is working. Maybe we should give more credit to CEOs, and maybe it's the reason why they make so much money. Maybe that's a thing too. Maybe he just has perfect timing, and more people are buying coffee because coffee is still... I don't think coffee is affordable, but let's just say that it is versus Chipotle. I don't know.
Yeah, coffee prices have gone way up.
Man, there's this coffee shop I go to, and of course they always get me on something else. It's not just a cup of coffee. And I feel like it's $20 every time I get out of there. It's like, man.
We have a family of 4. We go to like Dutch Brothers. It ends up being close to $40.
It's crazy.
I can't believe I'm spending $10 a drink.
$40.
It's close to $40. Yeah,
$10 a drink. That's real. That's real.
Yeah, and they always ask for tip.
No tip. Drive away. Okay.
All right. Real quick, last topic, as I think this is probably the biggest market mover, is the Fed cut rates. And what'd you expect, Chris? The rates went up. Son of a gun, we can't get this right. So we got a quarter point rate cut this week. And then I think rates went up because what Powell said is like, hey, this December rate cut is not a sure thing. We're going to still look at the data. And again, inflation's still at 3%. So, but I'm talking to my former self. I said we should have been cutting rates because we need to protect the jobs market. And that's that weird space that we're in, right? Like, and prices are still high, jobs are eroding. The start of stagflation, meaning what I just described. So if we have a pause, I think the market could react negatively. Mortgage rates, unfortunately, did tick up by 1/3% this week. And I don't know if we're going to get that right. Meaning getting mortgage rates down, prices down, like real estate prices more affordable. There's just a lot of things going wrong with that side.
Dude, he's out of his mind if he doesn't cut rates in December.
Yeah,
he's out of his mind.
I think he's just has to cut rates twice, move out of the way. And in May, again, Trump's going to get one of his guys in there, and
who keeps voting for double cuts, by the way.
Yeah,
so they're we know what that's going to do.
Yeah. We don't know. The bond market does not like what's happening. Essentially,
I think
that's why rates go up.
I think he's just doing what he always does, and he's not trying to give an absolute path. Like, we will cut 3 more times,
but leave the door open for
it'll just get priced out, right? Or priced in, excuse me. But it's just frustrating because he's using all these words very strategically to try to not make people price in the path of interest rates, and I think it's a mistake. Yeah, I mean, we're going to wake up to young people at 12% unemployment. We're going to wake up to, like, where are all these layoffs hitting the job market? We're not seeing it yet. Amazon just announced layoffs. Microsoft's been laying off people.
Yeah.
I mean, it's just...
GM laid off quite a few thousand people.
JetBlue, I talked about that in the last episode, 4,000 people. C.H. Robinson cut their workforce by 10%. I mean, it's
Rivian
like, this is...
cut.
I didn't see that. That's wild. I still have my name in...
a lot...
You're saying my R2 is going to be later than planned? That's too bad.
I don't know. I can't wait to see the car, though. I think they make beautiful cars.
I put I think it's $100. I put my $100 in a while back for the R2. Because I just think
you get interest on that? It should be worth like $104 at least.
You definitely do not get interest on that. No, no, you don't. And because I just think the current cars they're too big. They're too big for me. I want something a little smaller. So I put my hat in the ring, and they said they didn't give me a number, and they won't disclose on their earnings, but I'm pretty sure I'm well over 100,000 in terms of the number. They say they can produce a lot of these cars. I think like 200,000 a year or something starting next June, but they currently only build like 15,000 cars. So it's like, come on, how are you going to get there in overnight?
That doesn't seem possible.
It doesn't seem possible. So anyway, I'm not holding my breath. I think maybe in like 3 years, maybe I'll get my email saying your Rivian's ready, customize it. So anyway,
by then your kids are in college, and then
exactly don't even need it anymore.
Yeah, midlife crisis car.
Yeah, I can't wait. I put down my $100 deposit for my midlife crisis car. That's good.
Yeah.
All right then. Well, that's a wrap for today. We'll catch everybody in a couple weeks.
All right. 0.